Hello, everyone. This is Tim Allen with Massey Group at Compass. It is Friday, April 12th, 2024. This is your quarter two real estate market update for 2024. First quarter didn't pan out quite as I expected, and here's what happened and here's why. Mid-December, we had news that the Fed was pausing, and you started to see stories come out that suggested that the Fed was going to cut rates anywhere from 3 to 6 times in 2024. Well, fast forward into early 2024, new jobs data came out that was hotter than expected. CPI data came out, which is hotter than expected. PPI data came out that was hotter than expected. And we just recently had some data released this Wednesday. All those figures are still hotter than expected. So when we had the 10-year Treasury bottom just below 3.8% on December 26th, it's creeped up and is currently at the yield is above 4.5%. What does that mean? Well, mortgage rates trail as closely, or the metric that it trails, mortgage rates trail the closest is the 10-year Treasury yield. So we had rates bottom out late December. December and January were kind of unusually hot, and then rates have been volatile between then and now, and slowly creeping up to, like I said, 4.5%, and mortgage rates have followed. So as of today, the news still suggests we could see up to 3 rate cuts by the end of 2024, but there are certainly stories with the latest trends regarding inflation data that suggest that there may not be any rate cuts at all in 2024. If that's the case, we'll kind of be in this wait and see until the Fed feels like inflation is under control, and the market will kind of wallow along. So how do you operate in that environment? Well, if you're a seller, let me back up one step. Although the market may be slower, if we look at a supply and demand equation, there's a lack of inventory out in the market, but there's also kind of a lack of buyers out in the market. But when we look at the scales, that scale is still tipped in the seller's favor. So there is the possibility as a seller to get multiple offers. It's a little bit of a mixed bag out there. Some properties get multiple offers in certain markets, others don't. Others take longer. So the way you can look at it is if you're a seller and your house looks like it belongs in a magazine, there's going to be multiple people attracted to that house. And you're probably going to get multiple offers, assuming you have a good price on the house. Other properties might take longer. It doesn't necessarily mean they're not worth what you're asking, especially if the data backs it up. You just might have to wait longer because you don't have that herd mentality coming for your property. You're just waiting for that one perfect buyer that loves your house as much as you do. For buyers, what does this mean? Well, kind of the opposite side of that equation. If you like everything that everybody else likes, you're going to find yourself in competitive situations. In our market, that means you're generally offering over the asking price. Unfortunately, that also means you might be waiving some contingencies, which we don't recommend. Or if you go with properties that have been sitting on the market a little bit more longer, you might find yourself in a 1-to-1 ratio, or at least in less competition. There's greater opportunity there. Also, as rates tick up, you're going to see more creative financing tools re-enter the market, or re-enter the chat, as we like to say, including temporary buy downs, ARMs if you're not already using one. A lot more negotiating going on as buyers lose their purchasing power. So that's that. Let us know if you have any questions. Again, I'm Tim Allen with the Massey Group at Compass. Have a great week, and we'll see you next quarter.